Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about 4 high quality stocks or exchange traded funds that we intend to buy in the stock market in the week ahead. We talk to you also about the rationale and the reasoning behind these picks. Without any further ado, let's get into it. All right, the very first company that we plan to pick up a few shares of in the week ahead, either as a full share or fractional shares, is the Toronto Dominion Bank. It is a Canadian bank, but it also is available on a New York Stock Exchange with ticker symbol TD. Toronto Dominion Bank or TD Group also operates in the US market, and they have operations in the US. The last trading price for TD in Canadian dollars was at $96.73. The 1 week return for the stock was showing to be down by 2.69%. The past 1 month's return for the stock is a negative 1.36%. In the past 3 months, it is down by about 3%. However, if you look at longer term, 5 years return is trying to be at 46%, and the 1 year return is at up 15.7%. We currently have some fractional shares of Toronto Dominion Bank in our tax-free savings account, as well as our registered retirement savings plan. As you notice, about half a share in TFSA and about 0.07 fractional shares in our RSP account. However, in our personal non-registered account, we have 9.2 shares of Toronto Dominion Bank, and different returns that we are seeing from negative 2.4 as well as negative 3.7 all the way to the high of 31.7%. Toronto Dominion Bank does pay a dividend, and the yield for this stock is currently around 3.7%. Our second pick is an exchange traded fund, index fund called Evolve Automobile Innovation Index Fund hedged for Canadian dollars, ticker symbol CARS or CARS. As the name even suggests, this one is an index fund that invests in businesses or companies that are involved in the domain of transforming the automobile industry. As a result of that, a lot of exposure is to the consumer cyclical, followed by technology and energy sector. In total, there are 55 holdings that include as part of this index fund. Looking at the market price, the last market price for cars was at $39.40. It does rebalance this index on a quarterly basis, and it has about $84.7 or $84.8 million in assets under management. Majority of your exposure is to the companies from the US, close to 58%, followed by Germany, China, Britain, Sweden, and Canada. You can see the rest of the list here. If you look at the holdings, the 55, on top of our list, we have Bloom Energy Corporation, followed by PowerCell, Sweden, Plug Power, Fuel Cell Energy, and Blink Charging. You also see some other familiar names such as Tesla, as well as Fisker, NVIDIA, Skyworks Solution, Volkswagen, AMD, as well as NIO. Some of the more popular names that you see among the list of 55 holdings that you get exposure to through this index fund. As for the fee that you're paying by holding on to CARS, you're looking at a management fee of 0.40%. CARS was incepted back in September 27th of 2017, and in the past a little while definitely has not had the best performance. In fact, the last week return for this fund was down 8.3%. Past months, almost stagnant. The past 3 months is showing to be down by 16%. Past 1 year down by close to 22%. And the past 5 years, though, it is showing a positive return of 93%. So keep in mind, looking at the price for CARS Index ETF, the highest that it has hit goes back to November 16 of 2021, where the stock hit $64.35, and the lowest has been at $37.38. So currently it is trading very close to its 52-week low price. And the average price for the past 1 year is at $51.34. We currently have 18 shares of CARS in our tax-free savings account. It is showing a negative return of 23.5%. We want to take advantage of this kind of pullbacks and bring our cost average down. Our average purchase price currently for cars is at $51.50, which is quite higher than that of the last trading price for that. So most likely in the week ahead, we'll be adding to our shares of cars, most likely at least 2 or 3 shares that we would like to add. Our next pick is another index ETF. It is 𝗖𝐋𝐈𝖖𝐊 or Invesco Nasdaq 100 Index ETF. As the name suggests, here you get exposure to the 100 of the largest Nasdaq companies through this ETF that allows and is actually available in Canadian dollars. The last trading price for that was at $117.31. Nasdaq definitely has had a rough start to the year. Year to date, its return is negative 11.2%. But if history is any indication, when Nasdaq does perform poor in the short term, it definitely has proven to be, short-lived, and the return afterwards is always gonna, from the past history at least, compensate for that pullbacks, which is why we wanna kind of pull the trigger and add to our existing shares of 𝗖𝐋𝐈𝖖. We only have 2 shares at this time with an average price of $120.57. It is down by 2.7%. Keep in mind the 52-week low price for the Nasdaq here, the Nasdaq 100 Index ETF was at $106.01. That probably would have been the best time to add to our existing shares. Nonetheless, still it's far away from its 52-week high price of $137.97. It does also have a slight amount of distributions, which is at 0.79% annual. As for us, the intention is in the week ahead to add to our shares of 𝗖𝐋𝐈𝖖𝐊. Looking at the past 1 week return, it was down by almost 4%. The past 1 month, it was up by 7%. Past 3 months, it is down by 8.5%. The 1-year return is fairly stagnant, as only up by 3%, but 5-year return, look at that. Despite the recent declines, the 5-year return is an incredible 148%, which is why we wanted to add to our shares of 𝗖𝐋𝐈𝖖𝐊 in the week ahead. A little bit more about 𝗖𝐋𝐈𝖖𝐊. It has a management expense ratio of 0.22%. These management expense ratio are charged to the fund itself, so you're not going to be deducted from your investment accounts, but rather charged directly to the funds. As for number of holdings, we're looking at 104 holdings for 𝗖𝐋𝐈𝖖𝐊, and it was incepted back in June 8th of 2011. It seeks to replicate to the extent possible before the tax and expenses, the performance of the Nasdaq 100 index. It gives you kind of exposure to a portfolio of large cap, innovative and fast-growing non-financial companies. Among the top holdings, you're looking at companies such as Apple, Microsoft, Amazon, Tesla, Alphabet, NVIDIA, Alphabet, Meta Platforms, Costco, Broadcom, and these top 10 account for close to 53% of your exposure as part of the 104 holdings that they have. Sector allocation, almost half of your exposure is to information technology, followed by telecommunication services and consumer discretionary. And majority of your exposure, of course, is to US businesses with 98% of the exposure. Lastly, our fourth pick to buy in the stock market is another index ETF, ticker symbol VDY, Vanguard FTSE Canadian High Dividend Yield Index ETF. Looking at the past 1 week return, it was fairly stagnant, up by 0.2%. The past 1 month, again, similar story, up by only about 0.8%. The 3 months return was showing to be up by 6.25%, 1-year return of 25%, and 5-year return of close to 39%, close to 40% almost. Decent return. It does also pay a decent distributions that are paid on a monthly basis. The annual return currently is at 3.22%. The price range in the past 1 year for VDY, it went as low as $37.48 and as high as $47.99. And the last trading price for that, as we see, it is at the price of $47.24. We currently have 22 shares of it in our tax-free savings account, which is down by about 0.5%. And we have 1 share in our registered retirement savings plan, which is also down by about 0.5%. We definitely intend to add to our positions of VDY in the week ahead in the stock market. We talked about VDY in depth in the past, but just as a reminder, the management expense ratio here is at 0.22%. Distributions that I mentioned are paid on a monthly basis, and it has $1.8 billion in assets under management. The amount of distributions currently is at close to 15 cents per share that is paid on a monthly basis. Looking at the longer term return for VDY based on the market price, by the end of March 2022, the 1-year return was at 30.4%. The 3-year annualized return was at 17.3%, and the 5-year annualized return was at 11.4%. Well, there you have it, folks. A quick look into 4 high-quality stocks or ETFs that we plan to buy in the stock market in the week ahead. Let us know in the comment section down below if you have any of these picks in your stock portfolio right now, or if you plan to buy them in the week ahead. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone else who might benefit from the video as well. Of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, including dividend stocks, growth stocks, and penny stocks. And we also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.